Okay. Hi everyone. Welcome to my channel. And of course, for today, we will be tackling your standard costing and variance analysis made easy. Why made easy? Because I will help you understand your standard costing, especially your variance analysis, the easiest way. And of course, telling you the story behind every variances. No? And that is especially for your overhead variance, where I know most of the students here or most of the learners here are having a hard time understanding and memorizing your different overhead variances. Okay? But before everything, please click the like button and the subscribe button so that every time we upload the video, you get notified. And of course, click the bell button. Okay? Thank you very much. Are you ready? If yes, then let me get my pen out and of course start your standard costing. No? For standard costing, we will be tackling the concepts, what else, of course the formulas that you have, and we will explain where we get those formulas, especially your overhead variances. Okay, without further ado, let me start discussing your standard costing. Your standard costing is a practice, okay? And it is a system of substituting an expected cost for an actual cost in the accounting records. And this is usually a system used by some manufacturers to identify the difference, okay? The word difference is the same as the word variance, okay? When you say variance, you are simply looking at the difference between two costs, okay? It is the difference between the actual and what should have been. Okay? Alright. Ano yung actual mo? Let's give an example. May baon ka, no? Binigyan ka ng parents mo 100. Ang actual na nagastos mo, okay, is 80. Favorable ba yun or hindi? Favorable. Bakit? Kasi may ipon ka pang 20. Now, what if binigyan ka baon 100, yung nagastos mo 180? Okay? Favorable ba yun or not? No. Why? Abonado ka pa ng 80. We will be doing the same here in variance analysis. And that's under your standard costing. You are trying to identify what's the actual cost and what should have been. Now, in standard costing, you also set, no? Sabi mo, binigyan ka ng parents mo 100, dapat ang magagastos ko lang 80. Okay? Yun yung standard na magagastos mo. Meron kang budgeted na 100. Ilan na nagastos mo? 75. Ito yung actual. Favorable or unfavorable? Favorable. Bakit? Unang-una, ang meron ka 100, ang nagastos mo lang 75. Okay? Ang standard mo na magagastos mo 80, pero ang nagastos mo lang 75, no? In standard costing, we also have the same. We have your actual, we have your budgeted, and you have your standard. Okay, later on, you will see that especially under your overhead variances. Okay, now what is the purpose of your standard costing? Why do we do this? Okay, initially, your standards, these are norms and benchmarks, no? For measuring performance. It may be in quantity or in cost or your price. Okay, your standard costing is actually done, or it's more useful at the end of the period. It's as if you are relating this with your flexible budgeting already, because you are trying to adjust according to what is the actual performance. Okay? Trying to adjust using your standard costs, your standard price. Okay? Now, when you say standard, this is usually expected, okay, to be expressed in per unit. Okay? Naka per unit basis po tayo dito. This is different with the budget because usually when you say budget, the budget is coming from your standard together with the quantity that you expect to produce. So yung budget mo usually it's expected to be expressed in total amounts. So pag sinabi sa'yo ng company, what's our cost for each material? Standard po. Pakibigay po sa akin. You should give the per unit. Now, if you are asked about the budget, you are asked about the total amount that you are expecting to spend. Okay? It's that way. Now, your standard costs are realistic estimate. Why? Because you have basis here. Okay? Meron kang basis, and what is your basis? Number one, experience. Past cost. Okay? Most likely, your basis would be, ano yung naging cost mo nung nakaraan? What is the trend? Usually, ang ginagawa mo dyan, averaging. Okay? That is the reason why our standard costs are realistic. And this is because we are using that for analysis purpose, for evaluation purpose. We do not want to evaluate na ang ginagamit natin ideal because basically, we cannot reach the ideal. Okay? That is the standard. And realistically speaking, that is our norm. Now, what's the purpose? Number one, it is for you to establish budget. Again, standard cost, okay, is on a per unit basis. You cannot establish your budget without your standard costs. Anong standard cost mo for your labor? Anong standard cost mo para gawin itong material na to? Okay? Or itong product na to? What is your standard cost para bilhin itong product na to? You are using your standard costing system to establish your whole budget. Okay? Without your standards, you do not have the budget. So please put a check mark on this. Okay? You are using your standard costing number 2 for controlling your cost. You are trying to identify, you are trying to investigate saan tayo nagsobra, saan tayo nagkulang. Okay? What are our efficiencies? We have to maintain that. What are our inefficiencies? We have to exploit that. We have to remove that. Okay? How? By controlling your cost, by controlling your production, by controlling the purchasing department, no? By doing investigation. That is why your standard costing is usually, okay, applied at the start for your planning and as well as for your controlling and monitoring purpose. It is also used to promote possible cost reduction kasi pag-aaralin mo yan eh. Bakit mataas yung cost natin? What can we do to reduce it? Okay? Are we going to have a new supplier? Is it necessary? Or should we change our material? Okay? Yan yung ginagawa mo during the investigation. And let me just add, in standard costing, we are using management by exception, no? It means that we are investigating everything which are only material. Okay? Or we are only investigating items that are material. Hindi mo kailangan investigate lahat ng variance mo. Okay? Let us say you have variance later on with a very small amount for only 100. Eh, ang laki-laki ng entity mo. Would that matter? Yung 100 pesos ba na yun? Would it matter? Or would that $100? Would it matter? No. So don't investigate on it. Okay? Next, you try to simplify cost in standard costing. Okay? You try to simplify such that you establish predetermined cost already. When you say predetermined, that's your supposed cost already. Or that's your should-be cost for the period. And you expedite that on your cost reports. You also use standard costing in simplifying, okay, assigning cost to inventories as well. Di mo kailangan maghanap what will we assign on this one. What would be our applied cost on this? Okay, it's simply your standard. And of course, it's a basis for establishing bids and contracts and selling prices. Okay? So that's a very purpose of your standard costing. Okay? And kakambal niya palagi yung variance analysis mo kung bakit ka may standard costing. Okay? Now, let us continue. We have different variances. And basically, number one that we deal with is your material variance, okay? So let us start para maintindihan mo as a beginner, no? May you be a beginner, may you be a Sipale reviewer. This is something that I wanted you to remember, okay? Itong nasa leftmost side natin, this is called your actual costs. Okay? This is called your actual. Yung nasa rightmost side, this is called your standard. Okay? Now, anong tawag mo dun sa nasa gitna? Okay? Basically, or technically, if you try to go over your other MAS topics, ang tawag mo dito, flexible, no? Ito yung naka-flexible. Okay? Why do we call it flexible? Because your standard, okay, or your actual quantity is adjusted with your standard prices. Okay? There you go. Now, yung nasa gitna at saka yung nasa left, may variance ka dyan. Okay, where did you get that price variance? Look at the equation. Actual quantity multiply to actual price. Kaya mo nakuha si actual cost. On the middle, you have actual quantity and standard price. Try to compare the two. What is the difference? No? The difference is the actual price and the standard price. That is why if you try to simplify your price variance, you have your actual quantity multiplied to the difference of these two, the actual price and the standard price. Yun yung dinidifferentiate mo under price variance. Next item, the quantity variance. Take a look at your middle equation, okay? Or your middle formula. You have actual quantity and your standard price. Under your standard, you have standard quantity and your standard price. What is the difference, no? And what is the similarity? The similar item between the two is your standard price. They are both using standard price, but they are not using the same quantity. That is why it's called the quantity variance, because you are trying to differentiate the actual quantity and the standard quantity. Multiply to the standard price. Okay? That is your material price variance now. Sorry, that's your material quantity and the material price variance now. Okay? What could be the reason of your variance? Number one, pagdating sa price, number one reason is the increase in the cost of your material. Or probably, it's because you were unable to foresee any changes in the prices. Okay? Who is responsible for your price variance? It would be most likely the purchasing. Okay? How about quantity variances? What is the reason? Number one, usage na yan. Okay? Ilan yung dapat na binili, ilan yung actual na binili. Or, ilan yung dapat na ginamit sa production, ilan lang yung actual na ginamit sa production. Okay? Now, when you go to cost variances, technically, we are under your cost variance. Kapag yung actual na nagastos mo is greater than the standard or the budget or the should be, is this favorable or unfavorable? This is unfavorable. Balikan mo yung example natin, meron kang 100. Ito yung standard mo or yan yung binudget mo. Ang nagastos mo 80, no? Ito lang yung actual. Favorable or unfavorable? Favorable kasi yung actual mo mababa, meron kang savings na 20. But what if 100 ang nagastos mo 180, no? This is the scenario. Actual is greater than the budget, no? Or greater than the standard. You have unfavorable. So the same is true here. Now, please remember that if we are talking about revenue variances, point of view is different, okay? Kasi nasa revenue side ka. Don't forget that. Some students, okay, when they go to revenue variance, actual versus standard, pag mas mataas yung actual, sinasabi nila, unfavorable pa rin. Please take note, you are on the revenue already. Okay? So, cost point of view is different from revenue point of view. Always remember that. Now, we are done with your material variances. By the way, for the quantity variance, responsible party is usually the production. Okay? Next, we go to your labor variance. Technically, you still have the rightmost side. This is the standard. This is the flexible, yung nasa gitna, and you have your actual, your leftmost. Okay? The concept is the same. Look at the difference between the two. Okay? We call this the rate variance because these two items are comparing the rate. Under the actual, you have actual rate. Under the flexible, you have your standard rate. Okay? How about efficiency? You are comparing how good is our performance or is the performance of the labor force, no? Mabilis ba silang gumawa or mabagal? What are you looking at? You are now looking at the actual hours versus the standard or the should be hours used, no? When doing the production or when doing the labor. Now, who is responsible for the rate? Usually, it's our human resource. Of course, our rate that we incur and the standard rate only. That's what we are looking at. How about efficiency? Who is responsible? Again, it's under your production. Okay? So if you have variances on these items which are significant and if you will be investigating, go over the labor force, okay, labor committee, and your production. Okay? Or probably you have your labor supervisor. They can answer your question regarding your labor variances. So this is also our simplified equations for your labor variances. Now we go to the crucial part, which is your overhead variance. Now this is something that I wanted to establish to you students of accounting. Your overhead variance has two components. It is your variable and fixed. You still remember that your overhead has two components, variable and fixed. That is why when you are doing your overhead variance, you also have your variable component, which is these ones, okay, and your fixed component, which is the one below, okay. All right. So please take note of that and let me erase that so that our writings would be presentable. Now, during your undergrad, or probably currently, you are reviewing this. But some of you still do not know kung saan nanggagaling yung three-way, yung two-way, yung one-way, yung four-way. Tama? All of you are still confused. No? Are they all the same? Basically, yes. Saan nanggaling yan? It's coming from this expanded formula. Please take a screenshot. Okay? Please write it down on your notes. Post this video, write it down on your notes. Okay? Or take a screenshot. Why? Because this is your foundation. If you wanted to learn your overhead variance. Because everything comes from this. This is actually your four-way variance. Why? Look at this. You have your variable overhead spending variance, number 1. You have your variable overhead efficiency variance, number 2. You have your fixed overhead spending variance, number 3. And you have your fixed volume variance, number 4. That's your four-way. What is our three-way? Our three-way is simply combine the two. Combine the spending variance, that's your first one. You have your efficiency variance, that's the second one. And you have your volume variance, that's the third one. That is already your three-way analysis. Okay? How about the two-way? The two-way analysis is this 3. Combine these 3. What do you now call this? It's called your controllable variance. Okay? And your volume variance. That's the second one. That's why you have your two-way. Ma'am, since this is not included in the controllable variance, can I conclude that this is uncontrollable variance? Yes. Okay? Volume variance is also termed as uncontrollable variance or your capacity variance. They are all one and the same. I want you to take note of that. Please write it on your notes. How about the one-way? The one-way variance is simply the difference of your actual and the standard. Okay? It's simply the difference of your actual and your standard. I want you to digest that part, pause for a while, and please observe and absorb everything that I've said. Now, let us continue. I believe that when you are during undergrad, okay, or when you are reviewing for your board exam, or currently probably you are reviewing this topic, no? And you were able to see my video. You don't even know where these figures or where this formula came from, no? You have the one way here. One way is the difference between your actual and your standard. Actual factory overhead versus the standard. Where is that here? It is this portion versus this portion. Okay, the whole of this. This is the whole actual and this is the whole standard. Now, what do you call this? This is your actual. This is your standard. And this is your budget. Okay? Yung nasa gitna is budget. Now, let me emphasize budgeted fixed. Sometimes, on your problems, On your books, on your exams, even in SIPALE. That's usually given as a whole amount. You don't have to compute that. Unless it is not given, then you have to compute it manually. Okay? Now, the first way is simply your total actual versus your total standard. That is your one-way analysis. What is your two-way variance approach? It's your controllable and your volume. For the controllable, it is your actual factory overhead less your budget allowed on standard hours. Okay? Where is my legend? Here. You have your budget allowed on standard hours. On our illustration, where is that located? This is your actual factory overhead and your budget allowed on standard hours is where? It is the combination of your budgeted fixed overhead and your variable standard overhead. Or your standard variable overhead plus your budgeted fixed overhead. That's what you call your BASH. Okay? We go back to the equations. How about the volume variance? It is BASH less SFO. SFO stands for standard factory overhead. Where is that? Okay? It is this one and the total of your standard, no? The standard factory overhead. Nakita mo, everything has a story behind. May pinanggalingan yung mga minimemorize mong two-way, three-way na yan. Okay, now we go to the three-way variance approach. What is your spending variance? It's typically your AFO or actual factory overhead less BAA. What is BAA? Go to our legend. Budget allowed on actual hours. We go back to the previous slide. What is BAA? BAA is this one. Okay? Why? Because look at this. You are using your actual hours. Okay? But you are using your standard rate. Remember, BASH and BAA always have a variable and fixed component. The fixed component is the same. Okay? The fixed component is the same. The budgeted fixed overhead. You compared BAA to your actual factory overhead to get spending variance. Okay? Next item, how about efficiency variance? It is simply your BAA less BASH. Okay? Or BAA less BASH. What's BAA? BAA is this one. What is BASH? This one. Technically, you will cross this out. You are simply differentiating the budgeted variable overhead variance and the standard variable overhead variance. Correct? Yes. If you are going back, okay, or if you will go back to the four-way analysis, go to the four-way analysis. The four-way analysis will give you variable efficiency variance of budgeted variable overhead versus standard variable overhead. The same? Yes. It means that even if you are under the three-way efficiency variance or under the four-way efficiency variance, it should give you the same answer. Okay? What if it's not the same? Then something is wrong with your equation or with your formula. Take note of that. Something is wrong kapag may hindi parehas. Okay? Now we go to your volume variance, BASH less SFO. If you go back to your two-way, same equation lang or same formula. So, never mind. Okay? Now, under the two-way, the three-way, and the four-way, your fixed or volume variance should always be the same. Even if you only use the four-way, budgeted fixed overhead and standard fixed overhead. After all, yun lang yung dinidifferentiate mo. Saan ulit nanggaling? Again, dito pa rin sa expanded. Okay? Nanggaling pa rin yan sa expanded natin. Alright. How about the four-way? Again, the four-way I already explained. It is this one. Okay? Variable spending, fixed overhead spending, variable efficiency, and your fixed volume. That is your four-way. Let us now reiterate. What is your three-way? Your three-way is your spending variance, the total of this. Okay? It means that if you try to use this formula, the expanded formula, you compare it with your equations, no? Yung may formula ka dito, dapat parehas lang yung lalabas. Let's say you wanted to use this one, AVO less BIVO, no? You wanted to use that actual factory overhead less budgeted factory overhead. And then try to use this overall formula. You should have the same answer. Kasi yun yung pinanggalingan nito. I should say, ang pinanggalingan nito, okay, Yung formula mo dyan is this one. Everything comes from this. Okay? Nasaan yung pangatlo mo? It's the efficiency. Okay? And the volume. That's your three-way. Again, what is your two-way? We go back. Okay? Your two-way is efficiency plus spending plus fixed spending versus the and the fixed volume. That's your two-way. Okay? Now, try to combine the three. Variable efficiency, variable spending, fixed spending. Okay? Itong tatlong to, yung controllable variance mo, dapat parehas lang yung sagot mo kahit gamitin mo itong controllable variance natin na equation, which is your AFO, this one, actual factory overhead, and your BASH. Again, your BASH is this one. Okay? Now, we go back to the initials. This is your AFO. This is your SFO. Standard factory overhead and actual factory overhead. What's your BASH? It is budget allowed on standard hours. It is your budgeted fix. Ito yung fixed component mo. And then, it is your standard variable. Okay? This is your BASH. Where is your BAA? Your budget allowed on actual hours. It is this one. Okay? It has again your variable component and your fixed component. So everything under your overhead variance came from this expanded formula. Now, for more information and for example, please refer to our next video. Again, please like and subscribe for you to have more videos which are made easy and simplified and explained. Thank you for joining me. Like and subscribe and see you on our next videos.